Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the 24th of July. It's Wednesday. It's Utah's birthday. It's a holiday out in Utah, a state holiday. Not that the market cares. Really strong day for the bulls. Hey, Scott, good to see you, my friend. Welcome out, everybody. Hope you had a good day in the market. A pretty strong day for the bulls, pretty much top to bottom. Maybe let's start here on the S&P. Really just a little bit of a gap down on the open, but it was just, we're going from there. It was a very strong top to bottom day for the bulls. There's no really other way to put it. And when you kind of figure that, things like Boeing and Cat had some disappointing earnings, maybe makes it even that much more impressive. And welcome out, Patricia. Hi, Amy. Good to see you, my friend. Welcome out, Micah. You still are you still overseas, Micah? Or are you back yet? And hey there, Whitney. Good to see you, my friend. It's earnings season when you go in and you look and just looking at some of the top performers here today. Most of them were earnings, 10% up for Navi on a nice, response to the earnings. Unfortunately for us breakout traders, Edward Life Sciences gapped right open over resistance on a really strong buy. GWW up big. DFS actually not an earnings thing, kind of following through that break that we saw here yesterday. You can kind of see a lot of 8, 9, 7% on the upside, most of which are earnings related. On the other side of it, and we're glad to have you back. I hope you enjoyed your trip. You had Rollins, not a great response to that earnings. Market Access, pretty rough run. Norfolk Southern, pretty rough run. So it's, Cat, not a great follow through either way. Gap on the open, but really a back and forth day. So this really reflects how much of an earnings season it is, right? And it's not done yet by any stretch. And hey, Fortino, good to see you, my friend. It's another busy slate tonight, tomorrow before the open. Big names: Facebook, PayPal, Ford. Facebook looked like a beat, at least at first glance, was up around 3% after hours. Didn't have a chance to see PayPal. Looked like Ford was down on a little bit of an earnings beat, but that's about as far as I got in digging into it. So, 17 S&P companies reporting here tonight. And then tomorrow, it's even busier tomorrow before the open. Our old friends, Comcast, 3M, we have Bristol Myers, Air Products and Chemicals, certainly one that we've talked a lot about here. Waste Management, I know some of you guys have traded Waste Management. AEP, one of our utilities. So Hershey's, had a nice little break, but that's over. We'll see how they respond. So it is still very, very busy, as if you guys needed me to tell you that on the earnings side of things. As we kind of look, broadly speaking, for the most part, it was a pretty strong day outside of kind of the pockets of, a bad earnings report. I missed on earnings. We did see a little more selling and back and forth over in consumer goods. We've kind of talked about that a little bit, needs some time maybe before we can get too excited about it. So we're still looking pretty good, real clean close on the S&P going into yet another busy day, breaking through resistance. Hard to really say anything other than the bulls are in firm control. Just more evidence too that this low that we set up either Monday or late last week, a kind of a 3-day bottom, really can start to be, I believe, the primary support level, at least from a trend perspective. We shouldn't be going below that at this point in time. I believe we've seen enough movement to the upside to call that a swing support level personally. And welcome out, Adib. Good to see you as always. Hope you had a great day trading. S&P was definitely the winner. Dow lagging behind a little bit. You've got Boeing, you've got Cat. They were certainly not doing it any favors, but we're still kind of consolidating up top. Certainly held our own. For the most part, price action pretty darn similar to the S&P here today. Still got a little bit of overhead resistance above us. Beyond that, just like the S&P, there just isn't resistance ahead of us. So the bulls are definitely having a good run. Speaking of a good run, the NASDAQ continues to go. Semiconductors continue to stay hot, breaking through, that old resistance zone. If it mattered, it doesn't anymore. So just continues to be tremendously strong on the semiconductors for the most part. Obviously, there's, some are lagging, some are some are pulling a little more weight than others. Applied Materials just continues to go crazy, whereas NVIDIA is still kind of trying to see if it's actually ready to hold this breakout. But I mean, when you look at the semiconductors, we are seeing a lot of strength, and it is definitely being, seen in the NASDAQ and in the tech sector, excuse me, overall. So just another day, another all-time high, strong top to bottom candle. We're starting to pull away a little bit from our swing support level, which is good in the sense that that's support. So I think we're going to continue to be looking at this from a bullish perspective. And then, of course, the most interesting chart, at least index-wise today, was our RUT. Big, huge bounce up well over 1.5% here today. You could call this a breakout, and with some follow through, I absolutely think that you could call it a break. We do have this little intraday, shadow that we'll have to contend with if we are going to call it a breakout. But there's some space. There's really, if we can follow through on this break, there's just not really any resistance until we get into that 1600 range. So something to be kind of thinking about. If we are, managing condors, if we do clear this space, who knows what will happen, of course, but just not a lot of resistance until we get to 1600 or thereabouts in my mind. And welcome out, Emily. Great to see you as always. Hope it's all is well in Canada here today. So just another strong day for the bulls as things are just continuing to look pretty good from a technical point of view. Didn't see a ton of movement or follow through. We kind of got it all yesterday on XLB, right? Materials do remain strong. We do continue to show good strength in my mind, but not a lot of movement here today. Taking a little bit of a break. Of course, APD coming out with earnings here tomorrow. Something we'll be keeping an eye out for. I threw it up on the Tackle Trading Twitter, and I think it's worth keeping. I know we've talked a little bit about it, but Dow kind of in that W type of a formation, hasn't broke resistance yet, maybe never will, but I think, worth watching within that. We also watched that response on not Schwab's, SHW. Let's see if I can do that. Yeah, Sherwin-Williams. There you go. So follow through on that breakout from yesterday. Ton of strength going on over there. For the most part, I think we're going to continue to maintain the course over in the material sector for right now. Support still down here at around that 57. Really not a lot of resistance. We may need a pullback or a consolidation, but as the chart looks right now, I'm expecting to work into the $61 range on the materials ETF. Personally, that is what I am looking for. Over in the energy, a little bit of a run here today, coming off of the tops. Again, I'm calling this sideways. I think that is the right way to be handling the energy sector right now. In the very short term, the bulls are in control. If we look at this, say, on an hourly time frame, they do have a pretty, good handle on it right now. And so I don't think there's any real strong signals on the sell side at this point, but we're still within this range. You guys know where I stand. And hey, Jimbo, good to see you, buddy. Nothing has changed. Break above resistance, up here around 64.60, the 200-day moving average. I'll call that a bullish signal. A break below this low, I'll call it a confirmation. And look on the bearish side. I get it if we see some downward movement from a retracement. I get it if you're trying to trade short term, on the swing up, but I'm not interested in that personally. I'll continue to keep it. We do have some earnings in this area coming up here next week as well. Probably the most interesting, I don't know, there's a lot of interesting things going on. Semiconductors have been fun as of late, but the financial sector has been really interesting, really just a really strong day. And it's on the back of banks. We've kind of come full circle. We talked about it a little bit yesterday. It's worth talking about again here today. It's the banks, it's Bank of America continuing to run off of yesterday's break. It's Citigroup breaking out here today, closing above resistance. It's Wells Fargo. Some people like to make fun of Wells Fargo and aren't huge fans, relative to some of the other banks. Great movement here today. So it's really been on the strength of the banks. Our exchanges, our insurance companies, which for so long were kind of where the strength was, and the banks were just kind of back and forthy, seeing a little bit of selling here today, as you can see on ICE, or you can see on CME. You could also see it on NASDAQ, although a little lighter on the volume side of things. So it really is on the banks. Overall, we're showing some pretty nice strength. You had Visa come in with an earnings beat here today, breaking above some resistance. Of course, that's basically all Visa does these days, right? Is break above resistance, hitting all-time highs, still seeing some pretty good strength. It really is, though, on the back of the banks as of right now. I'm going to continue to like the banks. We still have to work through some, of course, earnings on some of the insurance. So that's kind of where I think we're focusing right now, at least on the financial side of things. We do have some resistance at around that $29 mark. That's kind of that next level, so to speak. Seeing some things break out of resistance. Those are just a couple of the ones that I'm following. But sadly, I wasn't working with our friends over at U.S. Bank. They're really on a tear. At breaking out and then breaking out again. Of course, we talked Discovery DFS. Really great follow through. Probably, if you're not here, probably hard to do anything with it just yet, but things are looking pretty strong over in finance, especially when we're looking at the money managers and the banks. A little less so right now in the exchanges and in the insurance. Well, it's kind of up in the air on insurance with so many earnings, I think. Over in industrials, decent little day, not a lot of resistance until we work into that $80 range. That $80 range is a resistance zone that we do want to keep an eye out for. Still have a little bit of room to run. Of course, not a great response to the Boeing report here today. That is, kind of par for the course on Boeing, I guess, these days, more struggling than performing well. Certainly didn't help it out any. We saw Cat knocking on the door when we first started, but let's take a quick peek here. A lot of indecision might be something we can keep an eye out for. Probably need some development, but there was certainly some indecision after the initial response. You saw some really nice movement on Lockheed Martin here today off of that 50 after its kind of initial response to its earnings. All of a sudden, it's knocking on the door of resistance. And so from the 50 to resistance. So there's some interesting things out there. John Deere, another in this space, knocking on the door of a breakout, but we've got a little bit of time for earnings, but knocking on the door of some resistance. We saw, of course, UPS and FedEx showing some strength as well. So as you're kind of looking at the industrials right now, I think you have to overall like what you see, especially if we take away some of those big names that are kind of dragging us down, at least here today. Of course, 3M, the big name in this space going into tomorrow. Unfortunate, this is a beautiful technical setup, I think, as far as reversals are concerned. Not that it matters. We've got to get through earnings, but we've talked a little bit about this one. This is a really good setup from a flip it around point of view. Of course, earnings are going to have something to say about this. Most likely, that's what got us into all this trouble this quarter in the first place. So something worth keeping an eye out for. Maybe not right away. We might need to, it might be a bad report and then we'll be bearish all over again, right? But if we get a decent response to the report, that's a pretty nice, reversal signal, at least in my opinion. So that'll be one worth keeping an eye on tomorrow morning before the open. I like where we, I could see an argument for Lockheed on a breakout, Jimbo. Hasn't happened yet, but I could see an argument for it for sure. Over in tech, again, a good solid day here on tech. The semiconductors are definitely doing more than their part right now. It is very heavily here in, it is very, very strong within the semis, but it's, it's in other areas too. We looked at Visa, talking finance, a little bit of a break. We've got our old friends Oracle starting to shape up. I think we're going to need to see a little upward movement before we can call this a pullback, but you have to like the little floor that we've built, kind of a little sideways range. I need at least a little bit of upward movement here right now. And during earnings, Emily, to that question, not a whole lot. I err on this, as you know, I almost always err on the side of caution, and so I'll complain and I'll say I want to do this, but it's got earnings in 9 days. Things tend to slow down quite a bit in earnings, and so for the most part, I'm kind of staying status quo right now as we're working through, especially this week into the the first half of next week. So generally speaking, I'm semiconductors. I like, as you know, you probably can kind of test my style. I'm a front runner. I like to find sectors and stocks that are in industries that are showing well. Whether it's insurance for so long, semiconductors today, the defense defense was very, very strong. So my general philosophy is to find pockets within the market that are very strong and really focus on those areas, trading into strength or weakness, obviously, if we're looking on the other side. So my general philosophy is is that. And then, for me, I'm a big fan of, thinking about out of the money credit spreads on directional stock trading, swing trading type of setups. So, using that as a vehicle in a lot of cases versus buying the stock or buying the call option, going out looking for a credit, going out of the money, basically the trend's going to hold type of stuff is my general philosophy. I'm kind of a wimp though. Hopefully that gives you a little bit about kind of my general philosophy, but I'm always looking for things that are showing strength or weakness, and I like it when they're clumped together. Love when we see things like the waste management companies all just trending together. From this last quarter, most recently, insurance, waste management, defense. Nowadays, we're seeing a ton of strength in the semiconductors. So I'm a front runner. I'm the opposite of Mark in that regard. He's the bottom feeder, and I'm the front runner. So I don't know if you could combine this together, you might have something. But everybody has to have their style. That's for sure. PayPal earnings here tonight, so certainly something worth keeping an eye out for. But tech is strong. Cisco's running out of time. Still got a little bit of a breakout. We've got 21 days until earnings. Probably if by next week at this time Cisco hasn't broke out, might be one of those. We'll see after your earnings report, but still kind of holding up. Apple not too far away on the earnings side either. So tech, right now it is, largely the semiconductors, but as you can kind of see, most of them are holding up pretty nicely, if not showing well, outside of the semiconductors in technology as well. Just a little bit more indecision here in staples here today. We need a little bit of a break. I honestly believe that we've had our pullback. We've seen some things showing some weakness, most notably Pepsi showing not all that great here today after breaking that support level, breaking below the 50. Have to be calling this, bearish in the short term at least. This is maybe an outlier because there's still plenty of nice looking Coca-Colas out there that are hitting, that are hitting highs. But I think right now it needs some development. I honestly really do. We need a little bit of sideways action in this range, off of this 20-day moving average, maybe next week at this time. I think there can be a great pullback opportunity, but I think we need some time, broadly speaking, at least. We're going to have to be a little more careful than maybe we've been accustomed to, too. We've had a pretty good run in staples, right? Another one of those front runners as of late, where basically the strength of the sector is drug pretty much everything up with it. I know that's an exaggeration. And I still think we overall look at this from a bullish point of view, although that's a pretty bearish signal on Pepsi in the very, very short term, I believe. But right now, I think we need some development. I think we have to be a little cautious in the very short term with the staples at this point in time, in a case-by-case basis. But right now, it does feel like they're kind of chopping a little bit more than maybe I would like to see. Utilities, trying to hold its own at that 50-day moving average. We did break below it here on the intraday, but rallied up pretty strong by the end of the day. Coming into an hourly chart here, you can kind of see that we had a nice little rally. Now, I think we need a little more development before we can say this is an interesting pullback. And I don't know how great it is, because I still believe until we break resistance up here above 61, I think we got to be careful. Careful may be a strong word. I think we have to respect that resistance. I think it's if you didn't believe in it last week or the week before, I think after the downward movement here today, I think that's just more information that it's kind of in a little bit of a maybe a little bit of a slowdown spot, at least in the very short term. I get it though, the pullback off of the 50, if we can see some upward movement, many of these stocks, we looked at them on Monday, many of them are still holding their trends, those that have been trending for so long. So I understand. I'm not going to fight somebody who's interested in utilities, but I still maintain the better signal is going to be the break than this pullback. I'm still concerned in the, for the short term at least, that this resistance zone is a problem. Now on the pullback, even if that's true, there's room to run. That's why the pullback's certainly in play in my mind. Maybe a little more development would make me feel comfortable, but some upward movement, I could see the case, aggressively speaking, as early as tomorrow. So certainly something maybe worth keeping an eye on if you've been looking for utilities. Finally got a little bit of a pullback, got a little bit of room between here and resistance, which is certainly beneficial if you're looking at new entries. Still broadly, though, I still think the break is going to be a very good signal, and we'll have to see if that is right or not. Over in healthcare, another back and forth. We talked about this yesterday. There's lots of earnings coming out. I think it's best to be really careful right now with healthcare, with all of the earnings that are coming out, throughout the rest of this week and next week. It'll kind of die down a little bit off of that. You did have, was it Texas Instruments here today, gapping up big time on an earnings. Probably doesn't do anybody any favors. I don't know what you're supposed to do with this tomorrow, but that's way too big of a gap for me, at least. But we are seeing some decent earnings. And again, part of it might be lowered expectations, but reality is reality, and so we'll call it what it is. Another one, and this is always why you complained about earnings if you're me, this was a really nice break. Look at this beautiful breakout. Do you know how many times I wanted to put that on Twitter over the last week and a half, but I didn't because I knew their earnings were coming up? Such a pretty chart, and now a gap to the upside. So we are seeing some pretty decent movement or responses, at least, to the earnings, but it's still very heavy on earnings. You could make a case, this is a pretty bullish candlestick, kissing that 50-day moving average, working into the 9. I think we need to break back above the 9. If we start to see some upward movement, I would have no problem with someone making the case that we're going to try to work our way back up into the resistance zone in that 94 range. Have to respect the 9 and the 20, particularly the 9, because that's the one we're fighting with right now. And if we are sideways, as you guys know, if we are sideways, those moving averages don't matter quite as much, at least not in my opinion. I do think we want to be careful, though, with the earnings, yet to come within this space. It's one of those areas for me. I can understand, if some upward movement, there is room to run to resistance. And so I'm not going to argue against it, but I think we should be careful. Over in the discretionary, good solid day. I mean, and this was the nice little pullback. We had our hammer yesterday, nice follow through candle here today. Amazon coming up here this week before we're done. Of course, Home Depot, who, by the way, Home Depot was the winner. Those of you who voted for Home Depot over on Instagram, it looks like that was the winner. You can expect that video. I think Coach Noah is going to be doing that one over on the Instagram probably soon. It might be there right now. I didn't have a chance to check this afternoon, so definitely check that out. Nice upward movement here today on that pullback, an area that, again, it doesn't need me to sell it. It's been tremendously strong. Got an interesting pullback too, potentially on TJX and TJ Companies here, kind of a little bit deeper than maybe I would like, but it kind of makes sense, coming back to that old resistance level, holding those moving averages. There's some interesting things. GM knocking on the door of a break out as well. You could even, it's kind of choppy. I don't know how you'd work with this one, but you could easily argue that it is a break. I think just looking at its chart, going to continue to like this area. It's going to have to do an awful lot to get me to change my mind. Amazon actually looking pretty nice here off of that low as well, but earnings right around the corner here on Amazon. Obviously, if we're thinking ETF, that's something we have to keep in mind. But overall, I mean, this area, it doesn't need me to defend it. I believe the chart says, for the most part, do a far better job than I could ever articulate. It's a pretty strong area. We do have some resistance on the ETF up here at 124.50. That's our all-time high, maybe worth keeping an eye out for. But between here and there, and even then, it's just a swing level of resistance. It's not going to scare me like this was going to scare me, for better or worse. Strong candle top to bottom here today as well. Over in real estate, it's its own little sidewaysy thing, right? It's certainly kind of in a little bit of a range. I think we, again, much like utilities, I think we wait for better signals. Broadly speaking, plenty of earnings are coming up very, very soon on some of these big name REITs. So that might, keep me out of it anyway. But I think right now we do have to be careful, at least until we can kind of reclaim these averages. If we see one of those nice gobble up candles tomorrow where we eat up the 50, the 9, and that 20-day moving average all in one candle, maybe you could talk me into it, that we can trust this support level. But we've got this overhead on top of us. We have put in a lower high. I'm hoping, and that's all that this is hope at this point in time. I'm hoping we spend a little while building out into a little bit of a triangle here, run up a little bit, then run down a little bit, get a little bit of a triangle, and then break out of it for our next signal. Will we get that? I don't have high hopes, but I am hoping for that. I do think that would be a nice development on the chart. Some things are looking a little weaker, right? We have seen a little, and again, that's maybe my opinion. I shouldn't state it as it is an absolute fact. Of course, you guys know that. But some of these things have pulled back a little bit more, breaking 50-day moving averages. I don't like that. I'm a front runner. I want it to be easy like it was, right? And right now, at least for me, it's not there. And as we look at that, ETF, I think that kind of explains it at least a little bit. We're just kind of stuck in a little bit of a range. Maybe it's not a big deal. Certainly could very easily not be a big deal. I can easily regret not buying off of this little support bounce in 3 days. But for me, I think we have to be careful. Those lower highs, some of the individual components breaking their 50-day moving averages, ton of earnings coming up. There will be other times for me, at least for the REITs. And over in the communication services, did have Facebook. We'll have to check that on the open. You guys know how it can go when you first, get an earnings report. It can change very, very quickly. But at first glance, it was a nice, nice response to the report. A little bit of an earnings beat. Google is tomorrow night. I want to say tomorrow night. So they're right around the corner. Great movement on the ETF here today. I mean, that was, we talked about the chart, and that was certainly some nice movement. Again, we need to get through Facebook and Google at the very least before we start talking about trading this ETF. But if we can get through Facebook earnings, at least at first glance, it looks like they're going to be kind of decent. And if we can get through Google's earnings without them being a disaster, we might be shaping up for an interesting chart on XLC. Still have some plenty of earnings around the corner in this area. We've been really heavy on some of the financial stocks, starting to get into a lot of the healthcare stocks, some of the consumer discretionary and big industrial stocks. There's still plenty of tech and communication services stocks yet to report their earnings. So certainly worth keeping an eye on. But right now, let's get through the Facebook Google combo, and then we can start to get a little clarity, because as you guys know, they matter a lot to this ETF. They matter a lot. So that's where we find ourselves on the stock side of things. As we kind of shift over into the VIX, a little bit of a drop down, strong day in the market, hitting highs, knocking on the door of highs. Usually that VIX is going to be dipping down a little bit. Exactly what we saw here today. Over in the dollar, doji day in that old resistance zone. Makes a lot of sense. It feels like we've talked a lot about that price tag before, that 97.70 price tag. Makes sense that that's kind of an area of resistance, at least potential resistance. A little bit of a doji here today, still pretty darn sideways. I think you can make a case of, if we can break through this resistance, not a big deal, not going to be terribly difficult to work back up to these highs, but that probably plays more on an intraday level than a swing level, as you guys know, for me at least, keeping this on the sideways from a swing perspective. A little bit of indecision in the price action at that resistance level, though, here today. Over in gold, we're getting a little bit of a pullback. I don't think it's quite there just yet, but I think we can kind of start to sneak down into some shorter term time frames to see what we're looking at here on a 4-hour chart. Kind of see that we pulled back. The good old fashioned pulled back a little deeper than I like, and then those moving averages are on top of us, right? So this is a 4-hour chart, so let's not go too crazy, but pull back, rally up, putting together a little bit of a ceiling. I think you can at least start to make a case, if you're interested from a pullback perspective, that breaking above this little high that's developed thus far this week could be at least the first signal to be looking for. Looking at it on an hourly time frame, again, you can argue that we're starting to build into a W/cup and handle, at least in theory. Still haven't broke resistance. Before anything new, I would argue we need to get back above 1430, and that might be, aggressive, and that's okay to be aggressive. It's okay to not be aggressive, but I think that's what we need. I need to see at least a little upward movement. The pullback doesn't look like it's complete just yet, but we are starting to identify on that shorter term time frame some resistance zones that could be, the catalyst for where, if I'm looking aggressively, I'm looking to get in. And then, of course, you have silver, which, it just keeps going and going and going. There's really nothing interesting to say about silver at this point. The chart isn't saying better than me. A ton of strength. These are always difficult to get into post these runs, but you can always look to those intradays, right? If you're looking for entries to get into it, a lot of room still. A lot of room. Yeah, we have Tesla with earnings here. I don't follow Tesla, Adib, because they're just, yeah, you know me. I'm a wimp, and Tesla not my jam by any means. But I know they had earnings. That'll be interesting to see, because I know I'm not. I'm me. I don't do Tesla, but I know a lot of people do. We've got a ton of room on silver still, so a ton of positive sentiment. The bulls are very, very much in control at this point in time. It's just one of those. Are we comfortable, right? And that's okay if we're not. We'll get our opportunities if we're not already in. We don't have to chase. We will always get opportunities. Maybe not on this swing. Oh, a nice drop down on earnings. I wonder if I imagine some folks around here were playing something that bidirectional for earnings on Tesla. That should be fun. Now, I don't mind looking at Tesla, but I don't ever want anything to do with them, at least right now. They're too crazy for me. Who's not too crazy is natural gas. They're actually pretty predictably, after working into that 9 EMA yesterday, putting that small body candle, broke that low here today. A lot of selling over in natural gas, breaking not just that intraday low from yesterday, but actually our swing low from I guess it would be Monday in this particular case. Again, it continues to be bearish at this point. It's all bearish until it's not. We've got to get back above that 250, that breakout point, that 50-day moving average, that 20-week moving average. We've got a lot of work to do before we can be on the bullish side of things. Doesn't mean we have to be bearish, but the chart is pretty bearish right now. Again, I don't see how anybody can make a case, at least as of right now. Maybe something new will develop, although I probably will still be arguing you can't touch it till it's above 250, unless that happens down at 180 or something. Maybe then we can talk. And lastly, over in crude, some movement to the downside here today. You could call this, a bearish retracement. We talked a little bit about it. I don't think that's the way to be looking at it right now. I think the break below this old 54 zone is a much clearer bearish signal, at least in my mind. So if I'm thinking bearish, that's kind of what I'm looking at. If I'm thinking bullish, not all that surprised. We've got a ton of overhead, right? Still on the upward swing, pretty nasty price action here today, ton of overhead. This thing, I think you're leaving alone from a directional point of view right now. Below 54 does seem to be a fairly reasonable place to be thinking bearish, to me at least. Of course, above 61 still, in play from a bullish point of view, although we've got some time before that even potentially happens. I just don't think there's enough room. If this support level matters, maybe it does, maybe it doesn't, but I believe it certainly can. And if that's true, there's just not much room to try to, play a directional trade on anything other than a very short time frame, which would of course make sense if we're trying to trade crude directionally right now. Maybe the intraday is the place to be looking, but do keep an eye on that 54. That seems like an area that if the other traders are looking to, other traders I'm hearing and talking to, they're looking at that too as a potential support zone. So whether it's a bounce or a break, seems like people's eyes are kind of gravitating into that zone. Everybody's calling it a little bit of a different number, but that zone is certainly a place that a lot of traders seem to have their eyes gravitating to right now. So ladies and gentlemen, that is where we find ourselves after a busy day of earnings. It's going to be another busy one here tomorrow. Once we get through this week, we're going to start to be seeing the light at the end of the tunnel, but still very busy, especially tomorrow. As you guys saw, I think in total, there's something like 40 some odd S&P 500 companies. You've got a Tesla, not an S&P company, but Tesla's no slouch by any stretch. Las Vegas Sands, another big name reporting. So busy on the earnings front. We, of course, have our Mind of a Trader. Coach Mark's going to be doing that here tonight. Should be a lot of fun. Hey, Johnny, welcome out, my friend. Great to see you. Always interesting to pick Coach Mark's mind for all our pro members. So have a good time in the Mind of a Trader. If you're not a pro member, of course, you know the drill. You're always welcome to head over to tackletrading.com. Send Mark an email at team@tackletrading.com. Tell him I sent you. He'll get you hooked up with a trial. You can come see what it's all about. Let's see here, guys. Make sure you check out the Instagram page. If you haven't had a chance to check out BBY over there, nice little runner on our break, a little bit of a breakout, seeing some nice movement on BBY. HD is going to be up there after you're voting for it. So if it's not there, it should be there very soon here. So be sure to check that out. Keep an eye out for how these things are responding to these resistance and support levels they're gapping into. Maybe there's something that can develop, Netflix style, where it broke down a little bit of a rally back today, but we can can definitely find some trades setting up. We're about another week away. I've hated doing the tackle trading Twitter this week, and that's the only time I really don't like to do it, because there's just not a lot of great setups that aren't specific on the earnings side of things, and it is what it is, right? I'll complain about it. You guys know me. I'll complain during earnings season, at least from a directional point of view. So if you are new to the channel, welcome. Great to have you here. Glad that you joined us. Be sure to hit the subscribe button, the notification bell. Join us over on Twitter at Tackle Trading. You, of course, can find me at FrankMartin23 on Twitter as well if you're ever looking for me. Have a good time to all of our pro members in the Mind of a Trader tonight. That should be a lot of fun. Mark's always got some knowledge. Ask him about the origin of the pinch. See what he says about that one. Yeah, at this point in time, you're welcome, Scott. It's a pleasure as always, guys. I always enjoy going through this with you, and I appreciate you guys hanging out with me. At this point in time, we're either going to need to see some sort of a turnaround type of a candle or a break of support, in my opinion, Emily. So if we're in on the break, we're already there. I think we're going to need to see some sort of a doji inside type of a candle. Right now, on the very short term, you do have the bulls kind of in charge of this thing. Need to see that kind of flip the other way if we're looking at it from a bearish retracement point of view. That could happen at the top of that gap, so certainly worth keeping an eye out for. But for me, at least, I think we need one more day, but at least one more day of development on a retracement level, or it's kind of in the, it needs to break the support level if nothing else. But that is just me. But I do think we need a little bit more confirmation. And if it's to the upside, it's to the upside without me. There's way too many strong stocks out there. I'm not trying to guess the bottom on Netflix after that disaster, but that's just me. That's the beautiful thing about trading. It takes all kinds, right? So hopefully that gives you something to think about, Em. All right, guys, thank you so much for joining me. As always, it's my pleasure. Appreciate everybody's time. You guys have a fantastic Wednesday night. Enjoy the Mind of a Trader here this evening. We'll pick back up same time and place here for another big round of earnings. It's interesting. The market's, little more movement today than yesterday, but we're seeing a ton of movement up and down on stocks as they respond to these earnings, which is going to open up the door for new opportunities in the very, very near future. We just have to grumpily get through the bulk of this earnings season, and then we'll be there. And you're very welcome, Whitney, Micah. Always great to have you guys here. All right, guys, get out of here. Have a great rest of your night. I'll see you same time and place here tomorrow. Thanks, everybody. Good night.